Imagine a future where the artificial intelligence that's transforming our world, diagnosing diseases in seconds, driving cars without human error, and even composing symphonies, suddenly stutters to a halt. Not from a cyber attack or ethical dilemma, but from the exhaustion of a single ancient metal buried deep in the earth. Envision rows upon rows of gleaming servers and colossal data centers, each one a powerhouse of computation, fueling the AI revolution. Yet all dependent on silver's unparalleled ability to conduct electricity and heat without falter. A dependency that's now pushing global supplies to the brink of collapse by 2026. This isn't a dystopian novel or a far-off warning. It's the urgent reality emerging in late 2025, as tech giants race to build ever larger facilities, while silver mines struggle to keep pace, creating a death spiral that could reshape economies, stall innovation, and leave billions wondering how we let such a critical resource slip through our fingers. To grasp the magnitude of this crisis, we need to rewind to the explosive dawn of the AI era, where breakthroughs in machine learning and generative models like those from OpenAI and Google DeepMind ignited a frenzy of investment and deployment that no one fully anticipated. By mid-2025, companies were announcing plans for hyperscale data centers that dwarfed anything built before, with Microsoft alone committing billions to expand its Azure infrastructure, incorporating thousands of Nvidia's latest GPUs to train models capable of processing petabytes of data in real time. These centers aren't mere warehouses, they're engineering marvels, climate-controlled behemoths spanning hundreds of acres, equipped with intricate cooling systems and power grids that rival small cities, all to sustain the relentless calculations demanded by AI applications, from autonomous vehicles to personalized medicine. Yet beneath this technological triumph lies silver's silent role, plated onto circuit boards, woven into connectors, and layered in capacitors to ensure seamless electron flow, preventing the overheating and signal loss that could corrupt data or crash systems entirely. As AI models grew more complex, requiring denser chip architectures and higher power densities, the silver content per server escalated, turning what was once a minor input into a voracious appetite that's now consuming millions of ounces annually across the industry. The suspense builds when we examine the supply side, where global silver production has plateaued at around 820 to 835 million ounces per year, according to reports from the Silver Institute and USGS, with little room for rapid expansion due to silver's status as a byproduct of copper, lead, and zinc mining, meaning output rises or falls with those primary metals rather than responding directly to silver's soaring price, which hit records above $67 per ounce in December 2025, up over 120% from the year's start. This stagnation contrasts sharply with the surging demand, where industrial uses alone, encompassing electronics, solar panels, and now AI infrastructure, pushed consumption beyond 1.2 billion ounces, creating structural deficits that have persisted for 5 years and are projected to widen to 117 million ounces or more in 2025 alone. Mining giants in Peru, Mexico, and China, which together account for over half of global output, face mounting challenges from environmental regulations, labor disputes, and geopolitical tensions that disrupt operations, leaving inventories at critically low levels and forcing refiners to scramble for scraps, all while prices climb relentlessly, signaling a market on the edge of panic emotionally. This shortage strikes at the heart of our collective aspirations, evoking a profound sense of vulnerability in an age where we've come to view technology as invincible. Yet, here we are, potentially derailed by a metal that's been valued since ancient civilizations for its luster and utility. Think of the researchers developing AI to combat climate change, only to find their tools hampered by the very resource constraints they're trying to solve. Or the everyday users who rely on cloud-based AI for everything from virtual assistants to financial advice, facing slowdowns or blackouts that erode trust in the digital economy. The highs come in stories of innovation thwarted, engineers at data centers whispering about delayed expansions due to silver procurement issues, executives at firms like Amazon Web Services grappling with cost overruns that could reach billions if premiums continue to spike, and investors watching their portfolios swing wildly as commodity markets react to each new announcement of AI infrastructure buildouts. It's a narrative that tugs at our fears of regression, reminding us that progress isn't guaranteed, and that the gleaming promise of AI could dim if we don't address this hidden flaw in its foundation. Introducing the core mechanics of this death spiral requires a closer look at how silver integrates into the fabric of modern electronics, particularly in the high-stakes environment of AI data centers, where even a microsecond of delay can mean lost revenue or failed computations. Silver's supremacy stems from its atomic structure, boasting the highest electrical conductivity of any element at 63 million Siemens per meter, surpassing copper by about 6% and gold by far more, making it ideal for minimizing resistance in high-frequency circuits and ensuring stable power delivery in servers that operate at voltages pushing the limits of material science. In a typical GPU cluster used for AI training, Silver appears in multilayer ceramic capacitors that stabilize voltage fluctuations, in bonding wires that connect silicon dies to substrates with micron precision, and in thermal interface materials that dissipate heat from chips, generating hundreds of watts per square inch. Analysts estimate that a single high-end server might contain several grams of silver, and when scaled to a facility with 100,000 units, like those planned by Meta for its Llama models, the total silver footprint balloons into thousands of ounces, a demand that's compounded by the need for redundant systems to maintain 99.999% uptime, the gold standard for cloud reliability. Transitioning to the broader ecosystem, we see how this AI-driven hunger intersects with other sectors, amplifying the strain on supplies in ways that create interconnected vulnerabilities across the global economy. Solar energy, for instance, which powers many of these data centers in pursuit of sustainability goals, itself relies on silver paste for photovoltaic cells, consuming over 140 million ounces annually and projected to grow as nations like the US and China accelerate renewable deployments to meet net zero targets by mid-century. Electric vehicles add another layer, with each battery pack and onboard computer incorporating silver contacts that enhance efficiency and safety, pushing automotive demand toward 100 million ounces by 2030. Meanwhile, traditional electronics, from smartphones produced by Apple and Samsung to medical devices saving lives in hospitals, continue to absorb hundreds of millions more, leaving little buffer for the AI surge that's only beginning to ramp up, as evidenced by Goldman Sachs' forecasts of data center power demand rising 165% by 2030. Translating to exponential increases in hardware requirements. The main storytelling unfolds in the corridors of power and boardrooms where decisions are made, starting with the tech titans whose ambitions are fueling this crisis without pause. Nvidia, the chipmaker at the epicenter of AI, reported shipments of millions of GPUs in 2025 alone, each one laced with silver to handle the thermal and electrical stresses of training models like GPT-5 equivalents. And as CEO Jensen Huang touts a future of AI factories churning out intelligence at industrial scale. The silver implications become stark. Projections suggest AI hardware could claim 50 million ounces or more by 2026 if growth continues unchecked. Microsoft and Google follow suit, with Azure and Google Cloud announcing multi-billion-dollar investments in new regions, from Virginia's data center hubs to emerging markets in Asia. Each facility demanding custom power infrastructure where silver's role in switchgear and transformers prevents catastrophic failures during peak loads. Yet these expansions occur against a backdrop of mining realities, where Peru's output, the world's largest at over 140 million ounces, faces disruptions from protests over water rights and environmental impacts, while Mexico's 120 million ounces are threatened by cartel influences and nationalist policies that could restrict exports amid rising domestic needs, building suspense further. Consider the geopolitical chessboard where silver's scarcity could ignite international tensions, much like rare earths did in the 2010s, with China controlling significant refining capacity and using export controls as leverage in trade disputes, potentially withholding supplies to pressure the US over AI chip restrictions. In 2025, whispers of such maneuvers already surfaced as silver prices spiked. And by 2026, if deficits deepen, we might see alliances forming among Western nations to secure mining rights in Africa or Australia, where untapped deposits exist but require massive capital and time to develop, time that's running out as data center timelines compress to meet investor demands for rapid AI rollout. Emotional highs peak in visions of what a collapse might look like. Delayed AI advancements, stalling cures for diseases like Alzheimer's, where neural networks model protein folding. Economic slowdowns as cloud services ration capacity, hitting small businesses reliant on affordable computing. And societal divides widening as only the wealthiest access cutting-edge AI, exacerbating inequalities in education and job markets, logically transitioning to potential solutions. The industry scrambles for alternatives. But silver's unique properties make substitution a Herculean task, copper. While cheaper and more abundant, oxidizes easily and offers lower conductivity, leading to higher energy losses and reduced efficiency in high-power AI setups, where even a 1% drop in performance could add millions to operational costs. Gold provides superior corrosion resistance, but at 10 times the price, making it viable only for niche applications like space-grade electronics, not the mass-scale deployment of data centers. Graphene and carbon nanotubes show promise in labs, with conductivities rivaling silver, but scaling production remains years away, hampered by costs and manufacturing challenges that haven't yet achieved commercial viability. Thrifting efforts, using less silver per component through nanotechnology or alloying, offer marginal relief. Perhaps reducing usage by 10 to 20% in solar cells, but for AI servers, where reliability is paramount, engineers hesitate to compromise, knowing that failures could cascade through global networks dependent on uninterrupted service. As we approach the climax, The projections for 2026 paint a harrowing picture of imbalance, with AI data center growth forecasted by Deloitte to drive U.S. power demand from these facilities to 123 gigawatts by 2035. But even in the near term, Alex Partners estimates trillions in spending by 2030, implying a silver draw that could exceed 100 million ounces annually if current trends hold. Combined with persistent deficits, Silver Institute data shows 215 million ounces short in 2024. Likely similar or worse in 2025. The market could see prices detach to $100 or beyond, as seen in historical squeezes like the 1980 Hunt Brothers episode, but this time driven by real industrial need rather than speculation. Imagine the tipping point. A major miner announces production cuts due to ore depletion, coinciding with a tech conference where new AI models are unveiled requiring even denser hardware. Premiums on physical silver skyrocket, forcing data center operators to delay openings, triggering stock sell-offs and investor panic that ripples through Wall Street. In this heightened tension, emotional narratives emerge from the front lines, miners in remote Peruvian highlands risking lives in unstable shafts to extract ore, only to see profits eroded by volatile prices. Data center technicians in Arizona's deserts battling heat waves while worrying about component shortages that could idle billion-dollar investments. And visionary entrepreneurs like Elon Musk at XAI, whose ambitious projects hinge on uninterrupted supply chains, facing the irony that the metals powering his dreams are as finite as the fossil fuels he's seeking to replace. The death spiral accelerates if geopolitical flashpoints erupt, such as U.S. tariffs on Chinese refined silver or Mexican export bans amid resource nationalism, severing supply lines and forcing a reckoning where AI progress slows, not from lack of ideas, but from the Earth's unwillingness to yield more of this precious conductor. Yet amid the climax's chaos, glimmers of hope appear in innovative responses, like accelerated recycling programs where old electronics are mined for silver at rates approaching 250 million ounces annually. Though still insufficient to close the gap without systemic changes, governments step in with subsidies for domestic mining, as seen in the U.S. Critical Minerals Initiatives of 2025, aiming to boost production by 20% through incentives. While tech firms invest in R&D for silver-efficient designs, potentially extending supplies through smarter engineering, these efforts build emotional resilience, shifting from despair to determination, as stakeholders unite in forums like the World Economic Forum to address the crisis, recognizing that AI's promise must be balanced with sustainable resource management to avoid a true collapse. Satisfyingly concluding this epic tale, the silver AI death spiral serves as a profound parable for our time, illustrating how unchecked ambition can collide with natural limits, urging a reevaluation of priorities before 2026's potential breaking point arrives. For investors, the message is clear. Silver's dual role as industrial necessity and safe haven asset positions it for continued gains, with forecasts from Metals Focus suggesting prices could average $80 or higher amid ongoing deficits, offering opportunities for those who act now. Society at large must embrace circular economies, where recycling and efficiency become norms, ensuring AI's benefits reach all without exhausting the planet's gifts. As data centers continue to devour supplies, remember that true intelligence lies not just in algorithms, but in our ability to foresee and forestall such spirals, forging a future where technology and sustainability coexist harmoniously, with silver shining not as a scarce relic, but as a wisely stewarded cornerstone of progress. Thank you for staying with me till the end. Here on The Scope, we dig past the headlines and uncover the hidden layers history tried to bury. If this documentary made you think differently, hit subscribe. Your support tells me to keep creating deeper investigations. Share this video with someone who loves powerful, untold stories, and leave your thoughts in the comments. I read everyone. A new, even stronger documentary is already on the way. So stay curious, and I'll see you again soon, right here on The Scope.